Hi, welcome to the Market Alert for Monday, the 24th of April 2023. So stocks, bonds, gold and crypto slide on Friday as US sovereign risk soars to record highs. So problems abound. Stocks meander while VIX remains at year-to-date lows, but hot data hits the bond market. News this week. Let's have a look. We've only got the German news today. There's nothing major this week. It's next week when we get the US FOMC meeting minutes with the next rate hike or potential hike, whatever that's going to be. So this week we're heading into that sort of bank holiday weekend yet again. Nothing's jumping out there at all. There's a lot of inflationary data with prelim CPI for Spain. We've also noticed we got that for the Germans. Yeah, Germany as well. So we'll see as we go through the week, but the market under a bit of pressure at the moment. So let's get on and have a look, see what happened on Friday and what's happening on the overnight markets, and we'll kick off with the Dow. So in the Dow for Friday, this is this bar here with the little d, there was a bit of demand trying to hold the market, but overnight, as you can see, already the market is moving down. It's already at Friday's low. Let's have a look at this in more detail, and you can see there's Friday's low there. There's the low that was made. We had a double bottom there. We moved up off this, and we also moved up off this one as well. So the question is, can we move up off the low that we see here on the overnight? I suspect that we'll get a bit of a bounce off this level. Whether it holds or not is a different matter given the fact of what's happening in the background there. And speaking of the background, the implied volatility, as we saw in the headlines, the VIX continuing to make year-to-date lows. So is the implied volatility down at 12.29. Now you have to go out quite some distance to actually see where this relates to. And we're going back to at least 2021 when we saw 1133 there. That was the last sort of big low to the left of the charts, and then we saw a couple of 1,000-point drop in the DAX. It doesn't look a lot on this chart, but it's a 2,000 to 3,000 point drop in these moves when the implied volatility got back to these levels. So again, as I've said for the last few weeks, we are in corrective territory as far as the implied volatility is indicating at the moment. And it may even get a bit quieter this week unless something of geopolitical nature comes out. You just don't know. But certainly the market's struggling, as can be seen there. We're getting highs that are not taking out the previous highs at the moment in the Dow. So there is a bit of weakness around there. And in the German DAX, we can see in the daily chart for Friday, the market moving up strongly in this green bar with some buying there. You can also see that the market's traded up to 89 and there is weakness overnight too. So during the day on Friday, the market traded down to the S1 level there, taking out Thursday's low. Soon screamed back though, didn't it, with all of this volume that you can see there. So down, back up, then retested at 78.89 level, and then sat sideways at this very important level as well at that low. You can see they were there for an hour and a half before the market then started to move back to the upside, moving up 100 and 150 points there before finding a bit of resistance at not too far off the previous day's high, which would have been Thursday. Overnight, the market's currently down. And unlike the Dow, which is trading at its Friday low, the DAX is trading at or near the DP, which has got the 50 EMA and the 200 there as well. A closer look at Friday's activity in the 5-minute chart. The market was sideways there. We had the shakeout down to that S1. Again, you'll see the volume there. It was oversold. We've got the crossover of the stochastics, came all the way back, 89% retracement to the 200 MA, and then we got into a bit of a sideways move there with the market struggling with Thursday's close before we had the shakeout back to the low. And there you can see again inside that detail where, if we just move this over to the left, we had the double bottom of the low, and you can see there we came back, we retested. Just look at the spike in the volume there, the momentum starting to switch to the upside, and then we see prices heading back up there. And in Friday evening, just drifting sideways, but overnight we've had a bit of a move to the downside. We filled the gap, and at the moment we're sideways to higher, coming off this BRN and the 200 MA at the moment with a cluster of volume there. Market's open in half an hour with the futures, so we'll see what happens there. Going back to the US S&P 500, also demand there for Friday. Overnight, some more weakness in this market as well. Very choppy session in the S&P during Friday, as was the Dow 30-minute as well. And you can see that we're drifting down a bit there. Watch the low in this market if you trade it from Friday. Also, the S1 should give a bit of support, because that will be, if we just draw in from this low to here, it takes you to the 78.89 for the S1. So you could expect a bit of support there too. In the FTSE 100, we're still trading sideways there, holding on the highs at the moment, having recovered from the Deutsche Bank fiasco a few weeks ago. Still stuck at that 89% retracement, which I've just managed to erase. So a bit of weakness there as well if you have a look overnight. But Friday, coming off the DP, we went through, shook out, and then brought the market back up to the R2, or just below that, which is now become the high, of course, for today. So back down and then stuck in a sideways range. We've got a gap there that's not quite filled, but we'll need to get above the DP and the close in order to do so. Switching to currencies, GBP JPY still trying to move towards the upside. Got hammered last week when it actually broke out and was pushed back, but managed to get back a bit and remake some of the gains during Friday there. If you have a look at the 30 minutes, it was pushed down to begin with, and then we changed direction and we came back up when the US opened there with resistance at the 200 MA. And overnight, stuck in a sideways move, but we have broken out to the upside, but this didn't last long, and we're now coming back to Friday's high where we're trying to find a bit of support. If not, watch the close. The 20 bar and 200 MA converging there, and also the 50 EMA. In the GBP pound, we've got this trading sideways at the moment, as can be seen there. 30-minute chart, we had a bit of a sell-off to begin with, which you can see there, with a retest down there before moving higher. Then we had the US news, and then the dollar weakness, and then the market moving up. And then we've got a new high where the market's traded up to Friday's high, and now moving down, but finding support at the 200 MA at the moment, which you can see there, trying to move higher with the market oversold. And in the US dollar, this moving up on the overnight, adding downside pressure to the currencies and also to the metals. So you can see there, but stuck in a sideways range and holding above. I could keep going on about this 101 level of support. So let's see if we've had the deck cap bounce, because the 20 bar moving average is creating a bit of resistance, and see if that's going to be taken out. In the silver market, down sharply on the overnight at the moment. You need to watch this low here. If this is taken out, then we will get on the skids, no doubt. We're back down below $25 an ounce as well. It's again incredible to believe that it's so cheap, but it is what it is. And in the 30-minute chart, you can see we were trying to get back on Friday, but then we had the news, we went up, we came back, 89% retracement, traded up to the 200 MA, which also ties in with the DP, and they've sold overnight in this level down, and we're actually through Friday's low there, just sitting on the S1. So let's have a look at the weekly chart of silver, just to get an idea of where we are, and we can see that we need to keep above the 5 bar moving average, and certainly last week's low. In the gold market, not down as much as is reflected by the gold silver ratio, which we'll look at in just a moment, but in the 30-minute chart again you've got that similar picture. We came down, we then traded sideways, the news was released and then hammered, and then back up, back down, and then overnight. So we've seen the market move up towards the close of Friday with a bit of weakness there, but it hasn't taken out Friday's low, unlike the silver market has. Which is why you're seeing the gold-silver ratio moving back to the upside, which is no surprise because we've had this big decline in the gold-silver ratio. So any sort of sell-off is going to be exacerbated in the silver market, which is why you're seeing the gold-silver ratio moving back towards the upside there. Okay, so nothing major on the news front today. And like I say, next week it's bank holiday for everybody a week today. So we'll see what happens as we go through the week. I'm sure there'll be enough volatility. But as we've seen from the implied volatility, it's dropped off a bit there. The lower that goes, the bigger the correction will be when everybody gets back to the desk or there's a reason to move the markets to the downside. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.